Welcome to Trading Lounge and the Commodity Futures Report for Thursday, December 2nd, starting with iron ore here. As you may know, we are looking for a low in place here from the top here with an A wave, a B wave and a C wave down here, and the C wave with 5 waves in it. So we're just really waiting to confirm things here. The move to the upside here, we're looking for an impulse wave, but we don't have well, we have the first impulse wave here. That means we'll get another one over here, which we're getting at the moment. But obviously the supply level is here at the 650, which is a medium level. So we just need to get through that. But the move up here can be an A wave, a B wave and a C wave here. So we don't have a larger 5 waves. We have this 5 waves. That means we'll get another 5 waves. But what we're looking for here now is, well, this first move up here and the second move back here. We need the third wave here, because this here at this point can be, this is where it can come down at that point because it's only in 3 waves. So we need to see 5 waves up here to confirm it. And we'll also get an ABC pattern back at this point. So we're not going to miss anything as such because we'll be long over here. But and we need more price action to confirm that impulse wave, to confirm the direction of the market, and that's where we are at the moment. And stocks in the iron ore sector are lifting, are mirroring this particular pattern, but there is risk there at this stage. We don't know if we're going to get, we don't know if the trend has started. That's all. I think it's okay in a way because, if this here was wave 5 here, we could look at this as 1 and 2 and all the third wave here. But if that was the case, then this 4th wave here would pull back 38.2%, which is on this line here. But yet it's pulled all the way back up closer to, well, very close to 61.8%. So I think that we're on the right track. I know there's going to be a lot of problems here, and we're seeing it here as well. But yeah, we just got to wait it out. So the next thing we're going to be looking at is gold. Just want to get up my commodity list here. So that's iron ore. We're going to look at gold. We're going to look at crude, copper, gas, nickel, and the dollar. So moving over to crude, to gold rather, which is still in its triangle pattern. Where are we here for gold? There we go. Right, so let's just go back to the bigger picture here just for a wee while here. So this is the pattern that we're looking at here. It's a bit of a laborious journey, and I feel sorry for the gold bugs, but it's just the way the cookie crumbles. An A and a B and a C and a D, and then we're down for the E. So we have the A wave. It's nearly in place, but then we'll be looking for the B and the C wave after that. I'm not sure how far the C wave can come down. I was thinking 1720 at sort of max sort of area. So we'll see. This, you can see the stochastics loading up here, ready for another couple of days, and she'll be sort of crossing over and moving up into that wave B there at that point. So yeah, I'll try and pick the top here and explain that you need to get out at that point, and then we'll pick it up long again down the bottom down here. So that's what we're doing. So that's a 2-day chart. This is the daily chart with a little bit more. I've been searching for the low here, as you may know. Let's go into the but anyway, from this, when we get the A wave low in, then we'll be looking for 3 waves up for the B wave, and probably 1830 maybe, yeah, and then 5 waves down. That can take us down to, well, I'm thinking 1720, but look, I'm just speculating on that at this particular stage. So we do have 5 waves here. That means we'll get an ABC correction and another 5. That's how it is. So let's just check on the move into the intraday a little bit more here. So the wave structure is pretty clear in terms of 1 and 2, a nice strong 3rd wave here, the 4th wave here. There's a couple of things I could talk about here. The 4th wave could also go to here as an A and a B and a C wave and finish at that low there. But I just think that we could be looking at this as wave 1 down to here, ABC for 2 here, for 3 here, for 4 here, and for 5 here. So a move into 1765 area, and then the bounce back up in that regard. So a bit of a fluffing around at this point, but that's where we are, and that's that. So you can also, whatever gold stocks that you're looking at, they will be doing the same thing in a way. You'll be going through this with the gold stocks. I want to have a look at crude, which has fallen quite deeply. I'm just going to have a look at it on the tick chart here. I just want to focus on, that's the top of the market, right, above the $80. This is a CFD product here, so it's got a 10 decimal point. So anyway, now the thing here is I just want to explain a few things. So first of all, we can have an A wave here, a B wave here, and then 1 and 2 and 3 and 4 and 5 here, and we're finished, and we just move straight on up at that point. So that's a possibility. Now this whole move down, that would make that in 3 waves here. So what happens if we get 5 waves to the downside? So that means that we'd get a rally back here to the wave 4 of 1 lesser degree, and then another wave 5, then wave 5 down here to finish off. So that A wave up here. So all of this here, then this here becomes wave 1 at that point, and wave 2 here, and then all the way down for 3, 4, and 5 at that point. So that would be the second case worth talking about. And from this low of wave A here, then we'll come back up to the B wave at that point. It's possible to have, because we're in, I think we're in wave 2 really, but we'll discuss that in a bigger picture later. Yeah, so that's sort of where we are. So basically, in a way, we've either got this as the low, which I don't think is the case. We're more likely to have this situation here. So another rally back up to this wave 4, and then moving down at that point. So we'll probably be looking at that as the A wave there. Alrighty, copper, let's have a look at high grade copper. It's kind of working as expected. So copper, we've got this triangle pattern here for wave 4. It is diminishing as triangles should, like sort of into a point. Got a big fly in the room here. It was with 1st of December, we got summer now, so got fly alert in Australia. So the A wave, the B wave, the C wave, the D wave, and the E wave. So we've just been working through this, and it's been pretty kind to us in terms of what we've been looking at. So an A, B, C for the C wave here, then an A and a B and a C for the D wave, and then an A, B, C here for this, and then we can go. So we'll probably see the dollar, time that finishes there, we'll see the dollar top out, we'll see probably crude and gold and all of those, and gas, natural gas, all of those finish off, and then, because suddenly there's no trades at the moment, and then suddenly everything is tradable. I'm talking about commodities, of course, and that's the same with stocks as well, pretty much, and indices. There's either nothing or there's everything, The other thing I just wanted to talk about here as well, I've got myself a nice little ABC pattern down here that may or may not be finished here, but if we drop too far below, not so much the trend line there, that doesn't really matter, but if we drop below this wave C here, which is okay, if we drop below that there, right, then I'll need to change things a little bit. I'll need to put just move that out of the way. I'll need to put the B wave over there. I'll need to put the C wave over here for that. So this will become an A, B, and C wave here for the B wave, and down for the C wave. I don't think it's the case, and it's not really going to haunt us that much in all of that. So where are we now? An A and a B, wave C, wave B, and there's my wave A, sorry. So anyway, there might be a slight complication. We'll just see how it travels. It just might extend out a bit further, but no biggie. So that's copper. So natural gas, I've got that on this chart. So it's fallen out of bed a little bit, but we expected it to move down. I thought it would move down to the sort of around the 450 area, but it has moved further than that. But we just have to stay with it because we've got wave 3 up here. And we've got the A wave and the B wave here, and then from the B wave we're looking down to the C wave here in 5 waves. So we've got 1 and 2, and we've got wave 3 here and wave 4 here, and then going down for wave 5 there. So that's the sort of the bigger picture that hasn't changed over the last wee while. And if we go to maybe the hourly chart, or maybe a 5-minute chart or something. So yeah, so we've got wave 3 here with an A and a B and a C wave for wave 4 here, and then we're going down for wave 5 here for this. So I think that we're pretty close to the low here. Let me just check on this and bit of a gap there, so it's a bit hard to read that. I have to go for 1, 2, 3, 4, 5. So it's probably the 3rd, 4th, and 5th. So we're going to end up closer to. We're going to get a bounce off $4 probably. So that will come into there. The C wave here. So I'm thinking I'll check on this shortly, but I think that's the 3rd wave there. So we'll put wave 1 here for the time being, and wave 2 up here. And then that would leave this here as 1 and 2, and nice strong 3rd wave in the middle here, and then the 4th and 1, 2, 3, 4, 5 for the 3rd wave. So that should be in low there. So we should see a little rally back up into 450 area and then down, and then that should be it at that point. So it's been a bit of a journey, and I didn't expect it to drop so far from the 450. I thought that would be we'd get the 5 waves within that structure there. So I blew that. But the whole correction itself is sort of getting there, with wave 1 here and 2 here and 3 here, and A and a B and a C for wave 4, and then down for wave 5. So we're getting there. We're nearly there for that. And nickel, have a look at nickel. I'll go back to the daily chart first for these. So with nickel, we'd just been observing. We had the low here when we picked it up, and we're just looking for a B wave to move back up as an ABC. So that's in there. We can go long above the B wave, as I mentioned the other day, but otherwise we should be heading down into this box here for wave C of 2 at that point. So we'll just track 5 waves there, but it's going to take a while for that. And anyway, if we were going to trade this long, then what we would be looking for here would be the B wave to come down, wherever it comes down to. Let's just say that it comes down to the C wave. And then we would need an impulse wave to the upside, and we'll also need a bit of a classic trading levels pattern sitting on top of this medium level here before we went. So our long trade really for this will be above this little high just here through that on that 1500, that medium level there. We could do something down here if it's clear enough, because I always like to get a few positions under a level and then above the level. I mean, I won't trade this market. It's not my thing, but just pointing that out. And the other one is the dollar index, the DXY. So not a lot of change here. So we've got wave 1 here and wave 2, and then we've got 1 and 2 in here, and we're looking for the 3rd wave here. Probably be a little bit different, and then we'll look for the 4th wave to pull back into this line here. So that's occurred now. So this is that pullback from the 65, 72 and 80 here. This is all these 3 levels here, all group 2. So it's reacting from the 65, it's actually 96.50. I just call it the 65 number, but anyway, it's doing that. So it's just doing everything that it's supposed to be doing, and next move will be, well, it should start to work higher up into 98 at that point. But I'm thinking when this tops out here, if this is a top here, then it's at this point, as this moves back down here, we're going to see the commodities move up at that point. So I think that's really what we're waiting for. So as you can see, I don't think this is going to happen until after Christmas. Alrighty, I'm going to leave it at that. Thanks for tuning in. Cheers.